Hello, I'd like to talk to you today about the Personal Services Income Rules, or the PSI rules as they're known. Now, this is a very complex area of the law, and it's also much misunderstood despite the fact that these rules have been around for some while now. Basically, the rules exist to attempt to ensure that undue benefits from a tax perspective are not obtained in relation to work that is essentially personal services of a particular individual. Now, what I'm talking about here is, imagine you're a bookkeeper and you work for a company and you sit in the company's offices and you do their bookkeeping. You may very well think, look, this employee thing is not working for me. I'd like to set up a company and do my work through that and contract to my present employer, and that way I'll be able to split my income with my spouse and children. Well, these rules are designed to stop you doing just that. Now, the rules are normally regarded as applying to people that are described as consultants or contractors, but they can actually apply to a range of professions and income categories, including lawyers. Now, the rules apply to all sorts of business structures, whether they be trust companies or sole traders, although aspects of the rules don't apply to sole traders. Essentially, how the rules work is that income, which is PSI income, is attributed to the person who earns it. Now, go back to the example that I talked about, the bookkeeper. Now, the bookkeeper's working away at the company, performing bookkeeping services as they always did. Even if they're splitting that income with their spouse and children, the PSI rules say that they are taxable on the PSI income as if it were earned directly by them. The rules also apply to limit deductions for PSI income to things that would be allowable if the person concerned was an independent sole trader. Now, there are a series of tests to look at to decide whether the rules apply. And there's not time in a presentation of this length to take you through them all, but I'll refer to them simply to give you an idea of what they're about. Now, these rules are the results test, the 80% rule, the unrelated clients test, the employment test, and the business premises test. You probably get some idea from the titles as to what the rules relate to. It's important to remember that there's no overall smell test that you could apply to the PSI rules to decide whether they apply to you. You have to work through all of these rules sequentially, and sometimes you have to do it on a number of occasions during the year. Now, I advised a client recently who was a lawyer, also a lawyer, who was transitioning from an in-house role to setting up his own legal practice. And I actually thought I might be able to apply a smell test to the situation as a whole. Take it from me, it generally can't be done. There's no alternative but to getting advice in relation to each independent test to reach a conclusion as to whether you're caught by the PSI rules.